The ECB has decided to continue to print money and leave interest rates in the negative territory. This level of unprecedented action has barely kept the EU markets alive. The Swiss National Bank has also engaged in some of their own reckless policies by taking negative interest rates and bringing them even further down. You came here for the truth, so let me unveil that for you. Today we're going to have our focus on Europe. Let's begin with this. The Swiss National Bank discontinues minimum exchange rate and lowers interest rate to minus 0.75%. And this information is coming directly from the Swiss National Bank's own statements. Target range moved further into the negative territory. The Swiss National Bank is discontinuing the minimum exchange rate of the Swiss franc 120 per euro. All right, now if you remember what happened here, a few years ago, the Swiss National Bank said, look, our currency is too strong. We're doing too well, and so we're going to devalue. And we will devalue to a rate of 120 to the euro. So they purposely made their currency weaker, acknowledged that publicly, and tried to make themselves look better for exports. The whole world is having problems. We need to have our own. At the same time, it is lowering interest rate on sight deposit account balances that exceed a given exemption threshold by 0.5% to negative 0.75%. It's moving the target range for the 3-month LIBOR, everyone knows that, further into the negative territory to between minus 1.25% and 0.25% negative, and it goes on, okay? So what we're looking at here is the situation, the minimum exchange rate being introduced during a period of exceptional overvaluation of the Swiss franc. All right, overvaluation. Or is it properly valued? And the market was trying to decide that by putting money into it. And as a result, oh no, we'll just make sure that you don't do that. The Swiss franc and an extremely high level of uncertainty on the financial markets. This exceptional and temporary measure protected the Swiss economy from serious harm. While the Swiss franc is still high, the overvaluation has decreased as a whole since the introduction of the minimum exchange rate. Okay, it goes on. Well, look at what has happened recently. All Swiss government bill and bond yields out to 7 years are negative. So when you go out to the 7-year mark, 7-year government bond, you're getting negative returns. If I told you I had this amazing investment, okay, it is amazing, it's secure, it is something that you can hold on to for 7 years, and at the end of it, I'll give you just a little bit less. Who would sign up for that? I'd probably have no takers. Nobody would want that because they lose their capital for 7 years, and in the end of it, they get basically a little bit less than they put in to begin with. Now, what kind of strategy are they trying to complete here? I think what's going on here is that the only institution that will ever buy a piece of garbage like this is a central bank. That's the only one who would do that, especially to maturity. There's no way that an investor would hold a 7-year government bond at a negative yield till maturity. Just not going to happen. It's about as likely as the Argentina 100-year bonds being held until maturity. I don't think so. It will default 10 times in between now and then. Then we look at this. Directly from the ECB's own website, January 25th, 2018. At today's meeting of the Governing Council of the... By the way, just before I start here, the ECB said that they would taper, and they would look into tapering, they would look into normalizing interest rates. Supposedly, globally, we are to see $1 trillion worth of tapering this year, 2018. That's not going to happen, but take a look at this. At today's meeting, the Governing Council of the ECB decided that the interest rate on main refinancing operations and the interest rates on the marginal lending facility and the deposit facility will remain unchanged at 0.25 and minus 0.40 respectively. The Governing Council expects the key ECB interest rates to remain at their present levels for an extended period of time and well past the horizon of net asset purchases. So they said, look, we're going to stop printing at some point, but we promise to leave interest rates in the negative territory. I don't see how they can ever stop printing. I don't see how they can ever increase interest rates. Regarding non-standard monetary policy measures, the Governing Council confirms that the net asset purchases at the new monthly pace of 30 billion are intended to run until the end of September 2018 or beyond if necessary, and in any case until the Governing Council sees a sustained adjustment to the path of inflation consistent with its inflation aim. All right. They can't do it. They're not going to be able to do it, and they're counting and relying on the economy in Europe to start doing better, their assets to start providing them with a little bit of return. Not going to happen. It just isn't without something major changing, and I don't see that going for the better. It looks like, if anything, it's for the worse. If the outlook becomes less favorable, or if financial conditions become inconsistent with further progress towards a sustained adjustment in the path of inflation, they stand ready to increase the asset purchase program. Now, their asset purchase program is something that you need to keep a very close eye on. We are looking at central banks engaging in incredible levels of monetary, fiscal policies, stimulus packages, bailouts all around the world. And they don't have anything to provide. There's no way that these countries are able to give anything useful to the economy. These central banks, of course. Anything useful to the economy, they can't fix it. They can only make it worse by printing more money and reducing interest rates. Almost $10 trillion of negative yielding debt. And this was back in 2016. The number has increased so dramatically since then. I mean, even if you take Japan out of the equation, the chart would look a lot less bad when you compare it, of course. But if you were to stretch this chart out over that same distance here, you would get to see how bad it really is. We are talking about trillions of dollars that have made their way into the system at a negative yield. Look, we have all this debt. We'll package it up. We will sell it to investors. Might be the central bank, might be the, some sort of subsidiary company of the government. Anyway, doesn't matter. There's trillions of dollars of garbage floating out there at a negative yield. There's no way that's sustainable. I really don't care what anybody says. That's why the markets have been allowed to last. It's because of all of the unprecedented policies. This is the CSPP, a different look. I mean, I've shown you, I believe it was UBS who calculated it all and took it all, put into a spreadsheet, all the different ISINs, I believe it's referred to as, and you'll see the different, basically how much all the numbers, all the figures, right? Look, just one example, BMW. All right, big company. I see BMWs on the street every day. The company is definitely, at least on the outside in terms of car sales, I'm sure they're doing very well. But the company needs a bailout, right? So what do? Well, they ask the ECB, they sit down, they say, hey, help me out a little bit, give me a little love, can you spare some change? And of course they do so. The ECB is printing up money and basically buying, to different degrees, the debt of all companies in Europe. And they're doing so in order to make it so they don't have to go bankrupt. I don't know how to put it any more clear than that. That's what's happening today. The situation is very, very intense, but we're not allowed to really discuss it. This is a pie chart here, but I just wanted to show you a couple things here. ECB and the BOJ balance sheets, right? Everybody knows that since, let's say late 80s, early 90s, Japan was in some serious trouble, printing up currency like you wouldn't believe. But you don't even see that here on this chart because of the fact that they have gone into astronomical levels in the recent past. It was bad down here. It was extremely bad down here. And now today, it's gone. It's gone. It's done. Japan is finished. The ECB and the BOJ balance sheets together, lo and behold. All right. Now, I think we know what all central banks are doing. And it is pretty clear to me that they are all engaging in the same policies. They all hang out together and they all try to make sure that I can't even keep a straight face while drawing the heart over top, but they are all engaging in the same policies. They all have the same exact goals in mind, and that is to devalue currencies worldwide. And I'm sure all of you know that. You've heard me like a broken record. This is the Broken Record GPS. And of course, I'll end it there. I hope you found this video informative. If you did, please give me a thumbs up. When you give me a thumbs up, it helps to push these videos and this channel higher up in the YouTube search rankings. So I do appreciate that very much. Last but not least, if you found this video informative, I know you'll find my books, The Money GPS and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books at Amazon. There are links in the description below for you to check out. Take care. If you're still here, just wanted to let you know, a little bit under the weather today, but I wanted to bring you this information and I hope you appreciate it. That's all. I'm really thankful for all the subscribers out there, all the positive encouragement. Thank you all.